Hello. Avanti Feeds Limited is a 11,000 crore valued shrimp company which sells shrimp feed. And today we're going to analyze the company's latest con call to analyze how much is the management aiming to grow in the future, the revenue targets, profit targets, and much more about the business. So let us start. So we are currently on page 2 and we are going to go to page 5. So page 5, the company says the company's feed sales, that is shrimp feed, that is literally like the food used to feed shrimp. So company's feed sales during the first 6 months of fiscal year 2026 is around 3,20,228 metric tons against 2,93,487 metric tons in the 6 months fiscal year 2025. So the first two quarters, that is the first 6 months of fiscal year 2026, had way higher sales than first 6 months of fiscal year 2025. Not way higher, but higher sales. And it is estimated that their overall feed sales during fiscal year 2026 will be around 5,76,000 metric tons. So you can calculate now this much in first 6 months, this much they're expecting in the total year. So the last 6 months, how much will they actually produce? So let us move to page 6. Again, statement by the management. The company's shrimp exports. Now, the company has two divisions. One is selling shrimp feed, that is the food to feed shrimp to farmers. That is the biggest revenue segment. Second is the processed shrimp revenue segment, where they buy shrimp from farmers, they process the shrimp, and in the form of maybe frozen foods and all of that, they export that shrimp. This is the lower revenue but higher profit margin segment. The company's shrimp exports during fiscal year 2025 were 14,149 metric tons. In 2024, this was 13,444 metric tons, and it is estimated that the exports during fiscal year 2026 would be around 17,000 metric tons. That is good. That's really good. 14,149 metric tons all the way to 17,000 metric tons. That is really nice growth. I think that is almost 20% growth. If I'm correct, that is around 20% growth, which is really nice. And hopefully, the price per shrimp is remaining constant or slightly rising. Okay, we can remain hopeful around that. Now, this was page 6. Let's go to page 11, talking about the market share of the company. Now, as far as the market share is concerned, definitely we are above 50%. Now, 50% of what? As far as I understand, 50% of all domestic shrimp feed sales. Okay, feed sales in India. They're currently selling 50% of all shrimp feed sales in India. And currently the market share is around 51 to 53%. And they think that we will operate to continue to hold that position at around 50 to 53% in future also. So expecting the market share to remain around 52 to 53%. Now, this is a big statement. Okay, this is the last statement also. This is going to be a short segment. This is a big question and a big answer. So question was asked by an analyst, I believe, Akhilesh Rawat. So my question is like, as we have seen that fish meal, SBM, and wheat raw material prices are rising after quarter one. So can you quantify the feed margin sensitivity like for every 1 kg increase in key raw material prices? So based on like current raw material prices, should we expect like our fiscal year 2026 feed EBIT margins to revert towards historical 10, 12% or remain closer to H1 levels? Okay, so the answer we're going to get is going to tell us first about the raw materials used in this business. That is fish meal, wheat, raw material. Then we're going to get the prices of them and how they're determined, like some important factors determining the prices of these particular raw materials. And finally, management is going to tell whether with like they're currently witnessing increase in these raw material prices. So will margins, profit margins revert back to the historical mean or they will remain elevated as it is right now. Right now, the margins are better than normally. So, answer. See, it's very difficult to tell for the next quarter three and quarter four because the prices of these raw materials are increasing very significantly for various reasons. For example, fish meal is going up because Peru has very less catches this year and even Chile. So when these countries, Chile and Peru, are the major countries supplying the fish meal, when the production reduces, automatically the global fish meal rate increases and the demand for Indian fish meal for exports increases. So the Indian fish meal manufacturers prefer to export because they get a better price. For example, the fish meal, locally 60% protein, is being sold at around 125 to 130 rupees, and they're able to get around 175, 160 rupees rates they're able to get exports. Moreover, they get some incentives also for exports. They're tempted to export than to supply to the domestic market. Chile has not yet announced its total quota available for the export. Once it comes out, I think we are expecting that prices get stabilized. It will not be less than 125, 150 rupees. That is the fish meal situation. So fish meal is one of the big raw materials, and it's written here that Chile and Peru, what do you say? They are very important for fish meal. They are the big countries supplying the major suppliers of the fish meal. And if their production reduces, the global fish meal rate will increase because supply goes down. If demand is still there, price of course goes up. And the demand for Indian fish meal exports increases because Indian exports are the cheaper one for other countries. So that increases. Now, Indian fish meal manufacturers, they will try to export more. So already supply from, let's say, Chile and Peru will be less. Indian fish meal manufacturers will export more. That will reduce supply for Indians, like the Indian shrimp manufacturers, the shrimp manufacturers, the farmers, the shrimp farmers. Already they will get less, and Avanti Feeds, I guess, will suffer because yeah. Avanti Feeds will suffer because Avanti Feeds is getting the fish meal. Yes, Avanti needs the fish meal to make the shrimp feed. Okay, yeah. So they will suffer if the chili and all of that is not doing well. Now, there are incentives for exports also. So continuing, coming to the soya. Now, soya is the second raw material we're talking about. Soya has a two-phase impact. So one is that this year, because of the excess rains, the production has come down by around 10%. Okay, so that is the one reason there's likely to be a slight shortage of soya seed production. At the same time, the government of India has announced increase in the minimum support price by around 3 rupees per kg. So these are two factors that have really influenced to increase the prices to grow up. So two reasons, one is government and one is production has come down. So if that price is going up, all right, that's the raw material cost increasing for Avanti. Then, particularly in the state like Maharashtra, they have made it mandatory thing for all the soya processes to buy from the farmers only at the MSP, minimum support price. So prices are definitely going up. Okay. Wow, so prices are definitely going up for soya. While for the chili one, they're expecting it to stabilize. Then when the government is procuring for the food security, naturally the prices will go up. All right. So we can expect that the next couple of months the prices will keep on the high side, and therefore we will have to see once the government exhausts this quota of purchase, the prices also may likely to stabilize, and we will have to wait for that for around February, March. That's what we're expecting. All right, so quarter three, they're expecting prices will be elevated. But then when quarter three ends, we are around the end of quarter three. February, March, that is quarter four, prices will stabilize. So maybe things get a bit better for quarter four. There's a large paragraph. Let's go to the end. So the margins are naturally likely to come down to maybe around 9 to 10%. 10% is a good achievable profitability for the current year overall. Now that will now that till now we have been doing very well. We will have to wait for the next 2 quarters and see how the profitability will be depending upon the raw material prices, reverting back to 9 to 10% because of higher raw material prices.